Hi guys, today I'm going to talk about concessional superannuation contribution. I have listened to my clients a lot about this thing, and some of them don't know what this is. They think it's a type of superannuation fund. It's not a type of superannuation fund. It's only a pre-tax money that you put into your superannuation. Anything before tax is deducted, you put into your superannuation is concessional. You can see from the slideshow over here, it's concessional superannuation fund. These contributions made to superannuation fund before your tax contributions. These are the before tax contributions. Now there are three types of concessional superannuation fund. Number one is when your employer contributes under the superannuation guarantee scheme. So this is when your employer contributes towards your superannuation fund, the 9.5%, which is the normal, and then the 17% and 14%, which is for the Department of Education and some universities and stuff like that. Then contributions made under salary sacrifice. I'm going to do a separate video on salary sacrifice. I'll show you, is it good for you to do a salary sacrifice on a higher wage or a lower wage, and vice versa. So whenever you do salary sacrifice with any organization that you're working for, this is pre-tax as well. Salary sacrifice is always pre-tax. That also comes under concessional. So remember this way, that concessional is like discount. Anything you say concession, you want a concession on something, which means you want a discount on something. So it's 15% tax. It is not taxed as the highest margin at the highest marginal rate. Now, tax deductible contributions made by an individual. Now, this is totally different, and I'm going to make a separate video on this because tax deductible superannuation contribution is different. So what happens is, after taxes deducted from your salary and wages, whatever the net salary you get, let's say you still want to put $200, $300 every fortnight into your superannuation fund after you take home pay. This is when your salary comes into your account, which means tax is gone, your normal super is gone and everything. Now what you can do is you can claim this amount back in your tax. Now I had a client once who said, oh, you are giving from one hand, you're taking from the other hand, there's no big deal in it. But there is a big deal in it, and I'm going to explain in a separate video. Now the contribution cap for 1920 financial year is $25,000, and you put in $30,000. Now at the end of the year, it's $30,000 instead of 25 you've invested into your super. After tax, post-tax super. What the ATO will do is, it will accept the $25,000 the way it is, and the rest $5,000 ATO will tax you on your tax rate. So whichever tax bracket you sit in. If you sit between the 37,000 and the 90,000 one, they'll tax you on 34.5%, which is 32.5% plus 2% levy. If you sit on a higher tax bracket, they'll tax you like that if you exceed the $25,000 threshold. Now, if you're making more than $250,000 a year, which many of the individuals are, then this includes your concessional contributions, then you pay 30% tax on your super. You don't pay 15%. Super is always taxed on 15% tax rate. But in case you're earning more than 215,000, including your concessional super contribution, then you pay 30% tax on your super. I'm going to make separate videos on especially these two, the salary sacrifice, where I'm going to actually make an Excel worksheet and show you guys how the calculations are done. And then I'm going to show you this one where my client said there's no use of putting money into your super after tax, where it's just money going in one way and coming out of the other. So if you have any questions, please feel free to contact me. Thank you. Bye for now.